The entire stock market has been dropping for the last 12 months and a recession is about to come. So is technical analysis still working? In this video, I will introduce the most common used technical indicators and I'll also run a demo how I run technical analysis, so make sure you stay until the end. For new followers, my name is Cody A. I'm a 7-figure stock option and real estate investor who has been featured on TD Direct Investing as a guest speaker, and also I was on 70+ podcasts last year alone. So what is technical analysis? All the traders or investors are spending a lot of time and money trying to predict the stock price action. In the short term, it helps trader or investor to enter and exit a position. It also guides the trader and investor what's the most likely to happen. But it's very important to say that technical analysis should not be the only variable you look at. You also have to look at the fundamental analysis, which I did one video probably about 2 years ago. So go check out that video at this link here. So here's $1 million question. Does technical analysis really predict the future? And here's what Warren Buffett said. Forecasters might tell you a great deal about the forecaster, but it doesn't tell you anything about the future. Even Warren Buffett himself does not have the crystal ball, and even himself cannot time the market correctly. So why are we still talking about technical analysis? Because in my opinion, it actually predicts the future to a certain extent. Technical analysis itself is a self-fulfilling prophecy. That means because so many people study it, so many people believe in it, then we can predict what will happen because people believe in such thing will happen. So it's more likely it will happen. Even though it's not an absolute number or percentage, it will definitely help you put odds in your favor. So how does traders or investors use technical indicators? Let's first look at the different type of traders and investors. Let's look at my screen here. So we look at a different type of trader or investor here, right? The first type is the scalpers. So those might be the quant traders, as in there's either humans, but mostly now done by AIs and algo. They basically look at a lot of technical analysis, their own indicator, and they make decision to buy or sell certain stocks. So they might enter or exit a position in minutes, and now because of the advancement of the technology, it could be down to milliseconds. And second is a day trader, where it gets a very bad reputation. People try to get in and get out within the same day and do not leave any position overnight. So they do not bear any overnight volatility risk. So the next type of trader is called swing traders. Swing traders typically enter and exit a position within a few weeks. So even when the stock goes up, it does not goes up directly. It goes up and comes down a little bit, goes back up again, comes down a little bit. It's kind of like climbing a stairs. Same when the stock goes down. It doesn't go down in a straight line. It goes down, come back up, goes down, and come back up a little bit, right? So because of that, the swing trader take advantage of those small waves of movement and get in and out and try to make profits. Last but not least, you have the Warren Buffett, which is investing, right? He's trying to buy and hold the stocks for long term of more than 5 years or 10 years, right? That's at the other end of the spectrum. So once you know all of these, you have to know which type of trader or whether you're an investor, so you know how to use the technical indicators yourself. For example, for some of my older students who are still selling options on individual stocks, they enter a position with a long-term investor mindset. They're willing to hold the stocks for 5, 10, or 20 years. But because they sell options on individual stocks, a lot of time they can close the position and realize all the gains a lot earlier than a few years. A lot of time it's between 30 to 60 days. Then they move on and sell another option on a different stocks or maybe the same stocks. And because of that, we call the capital rotation. They can greatly increase their return. So for you have to figure out which type of traders or investors you are, then you know how to use the technical analysis to your favor. So like I promised, now I'm gonna run into a live demo how I analyze a stock from a technical analysis standpoint. And here are the main things I'll introduce during this demo. The first is the stock price action. The second is supports and resistance. The third is the 50 days moving average, and the fourth is 200-day moving average. And all of this will be tied together in this demo. So let's get right into it. So if you look at the screen here, Again, I can pick any stocks, but I pick Apple as a demonstration because Warren Buffett's biggest portfolio is Apple. So let's look at Apple. Usually I start with a 5-year chart, right? I like to look at the 5-year chart because I want to make sure the stock has continued to go up, right? So stock right after, during COVID, a drawdown about 30%, but continued to go up. End of 2021, it reaches high, but now start pulling back, and it looks like it's coming down, right? So I have a good understanding of where the stock is going in the 5-year chart. But overall, comparing to now to 5 years ago, where the stock price is $42, right now it's at $132, it's still a 4x return in the last 5 years. So in my opinion, this is a very healthy stock. Then I'll go to the 1-year chart, right? We have a closer up looking at what the stock is happening. So if we look at this chart, you can see that, hey, it's been kind of choppy beginning of the year since a year ago, right? So 168 went up to 184, come back down, go back up, but gradually coming down. And for the last few days, where I'm filming this video on December 19, 2022, for the last few days, the stock has really dropped drastically. So now that we know the 5-year chart, now that you guys know I started 5-year chart and now look at the 1-year chart, I like to draw my support and resistance on the 1-year chart. So how do I draw a support? And what does a support mean? Support just means that a location where it has been touched multiple times at the bottom but did not break below that. But every time it hit it, it's kind of like you're hitting a floor, it bounced back up, right? The more times it hit it, the stronger the support. So let's look at the chart here. So in this chart, I'll probably draw the support as in here, right? At the 130 level. Why? Because the last time I hit it was around June 2022, right? The next up support after that is probably here, 151, right? Now, if you look at the resistance wise is about, one is here, 174, 179, right? And at the top is about 178, but this is good enough. So 2 support down at the bottom, 2 resistance up top. So every time you hit the support, it should be hitting like a floor, right? So let's go back to the most recent chart here. So it's about to hit the last support, right? So what does that mean? That means it's more likely to hit this floor and bounce back up a little bit before it decides where it's gonna go. Now, on the other hand, if you hit a resistance up top, right? Last time you hit here, it come back down. Next time it come back up to here, it will probably be like hitting a ceiling. So before it decides to break through the ceiling, it will come back down. It's more likely to pull back unless everyone vote that the stocks will continue to go up. Now that we draw some supports and resistance on the 1-year chart, I want to go to the 5-year charts as well. Right, so the 5-year chart, you can see those lines, it's very significant, right? And we can add in kind of like the resistance at 180, that's an all-time high, right? But add in some supports at, at this level here, 122, right? Then we can draw another support here. You can draw another support here. So why do I look at a 5-year chart where we already look at a 1-year chart? The main thing for technical analysis is that the reason why I look at a longer time frame is because the support and resistance on the longer time frame will trump the shorter time frame. That means the support and resistance on the 5-year chart will trump the 1-year chart, will trump the 3-month chart, will trump the 1-month chart, will trump the weekly charts. That's the strength of the support and resistance in that order. Now that we understand the strength of technical analysis in terms of the time chart, let's go back to the 1-year chart and I'll show you what 50-day and 200-day moving average is. As you guys can see, I already have an indicator turned on called SMA 10, 50, 100, and 200. Right? So SMA stands for simple moving average. A SMA of 50, simple moving average of 50, means that they take the average of the last 50 days close price and then they average it out and draw a line. Same thing with the SMA 200. The close price average of the last 200 days and draw out a line. As you guys can see on the chart, kind of like the purple color is the SMA 200. So this is SMA 200. And another SMA 50 that we're looking at is around kind of like the darker green color, which is this line over here. So right now we can see that SMA 50 is actually below the SMA 200. What does that mean in the short term? That means that the stock is actually having a stronger momentum to go down, right? When the 50-day moving average crossed below the 200-day, that means the stock is going into a death cross. That means the stock momentum is going down. And also because we're hitting a strong support level, this will make or break and decide whether the stock will continue to go down. But it's very likely to stop here for a little bit, and then they will decide whether the stock will go down more. So overall, when we tie all this together, right, we first look at the 5-year chart, decide whether this is a good stock to invest in the long term. Look at the 1-year chart, where the stock is going. Looks like it's kind of fluctuating, coming to the bottom of it. So if you're an investor, it could be a good time to get in and slowly cost average in to get some stocks. But if you're a short-term trader, this might be a time where you look at is actually more bearish, especially when we're looking at all the macros in this market. There's a lot of bearish sentiment, increased interest rate. The inflation is still really high, so the sentiment is that the stock market will suffer, even for a good stock like Apple. So just by knowing that and knowing your time frame, you know how to use the technical indicator. So with that being said, it's actually a lot of time and very risky to be a day trader, and it's really slow to be a long-term investor. A lot of my students has been using my proprietary trading strategy called Set and Done, and they have been achieving 1.5 to 4.5% return even during the market downturn since the beginning of the year. So if you're interested in learn more about that, I make 1-hour webinar, and you can check out the link in the description. With that being said, thanks for watching, and I will see you guys on the next video. Say yay.